So let's start with an example. It's actually something that happened to me recently. I tried to purchase something. It was 1 a.m. The cost was $5,000, and my transaction got declined. Obviously, I was very upset, but my issuer declined the transaction. And when I tried to understand what happened, basically what happened was that my issuer thought that this is a fraudulent attempt, that probably someone stole my card, because this amount is very, it's not a normal behavior by me, and normally I don't buy at this time of the day, and I don't buy from this website. So my issuer fraud decision was that this is probably a fraudulent transaction, and the transaction got declined. But what really happened was that COVID is over, and we really wanted to go to Thailand, and I was just trying to purchase tickets for the whole family. By the time I figured out what we are going to do, it was already very, very late. And today I want to talk to you about what could have helped my issuer understand that this is a legitimate purchase, because my issuer was not trying to annoy me. They were trying to protect me, but unfortunately they have made a wrong decision. What we call false declines in their payment, as you all know. And what could have helped is all about data. So the issuer needs to know what I'm trying to do and who is trying to do it with my card. So obviously, if my issuer could have known that I'm actually purchasing 5 flight tickets, not just that I'm purchasing from a company that is selling 5, but that I'm purchasing 5 flight tickets. If my issuer could have more detail about who I am and more confident in me, they would have approved the transaction, because I did have funds in my account. So how can data impact your bottom line revenue as merchant? And I will start with a small question for the one of you that want to try to guess, or maybe you know, and you can put it in the chat. How many risk engines assess every transaction? So if you just go online now, you want to buy something, how many different risk systems will assess the transaction and say if you are good or not? So it's a surprising answer. There are 4 to 7 risk engines behind every single transaction that someone is doing online out there. It starts from the merchant that maybe has a lot of data, especially if they're using a good fraud solution, and they also know that the person maybe is purchasing a lot of shoes because there is a sale, so they have more context. And it ends with the issuing bank that actually lacks a lot of this context, and they have more limited information, and there are more risk engines on the way, and each one of them is making separate decision with separate set of data. And why should you care, basically? And what can you do about it? This is mainly the question we want to answer today. You should care because you're losing transaction. Because if you're this merchant that I tried to purchase the flight ticket from, I ended up not purchasing it. I actually ended up purchasing from another website because I didn't want to go to Thailand. But you lost me as a customer. You probably also lost me as a returning customer because I had a really bad experience. What can you do about it? You can share insights to create trust. And there are different ways to share insights with the issuers and the card scheme. One of them is direct integration to issuers. One of them is through the card scheme. For example, MasterCard has a program which is called IDCI that you can share data and impact the risk score of MasterCard. There are trusted mid or trusted merchant programs with issuers. And there is also the 3DS protocol. And not a lot of people are aware of it because 3DS is a bit newer to the US, but 3DS is an amazing way, the protocol itself, to give additional data to the issuers that they cannot get through the authorization process.